Capitalwealthcounsel is an authorized financial service provider. For all your financial needs, please contact us at www.capitalwealthcounsel.co.za.
Hello, my people. Welcome back to Capital Wealth Counsel. Welcome, and thank you for joining us. I thought maybe it's a right time to just have another conversation, give you guys a lot more info tips around financial planning, how you manage your portfolio, and I think maybe most importantly, the role that your financial advisor plays in portfolio management advice, and also making sure that you're making the right decisions knowingly with informed decisions and substantial information on the plate. Today, I thought maybe let's just have a quick chat, maybe even just 10 minutes, just scratch the surface on the two-pot system. I know it could be slightly late. You probably would have wanted to have this conversation before the launch, but I think there's been sufficient information in the media, and I'm just reacting to behaviors that I'm seeing around the market with our clients, and some that are not currently clients that we are managing portfolios for. And most notably is that obviously majority of the insurance and investment houses have done a lot of work to prepare, and they're all ready, and the two-pot withdrawal system is already in full swing. But before I continue, by way of introduction, in case you are new to the channel, my name is Edward Banda. I'm a certified financial planner. I'm one of the anchors of the show that helps you to, get info tips or even explain comments and topics that you may have suggested in our comment section. And Capital Wealth Counsel essentially does not constitute financial advice in particular to this channel. All we do is just share relevant information around financial planning, insurance management, portfolio management, and making sure that you've got the right tools to equip you to be able to, make the right decisions in the market, or if you need to consult with a certified professional, we're always there, a phone call away, a text away, or even a visit to our website, www.capitalwealthcounsel.co.za. Yeah, so let's get into it. In particular, I'm sure you are aware that this legislation now allows, just in a nutshell, for those that are unaware of what the two-pot retirement system is all about, essentially what the government has done is they've now allowed members of retirement annuities, pension fund, provident funds to be able to access a portion of their saving. So ideally, 1/3 of your value in the investment or your retirement saving is now been moved into a savings component where you will be able to withdraw some cash in event of emergency from time to time, and the 2/3 of your saving is not available until the day you do retire. Unlike in the past, I mean, you could see that when people resign or change employment, there used to be a habit where if you've got $500,000 saved up at the time of resignation, you'll have the opportunity to either cash in the entire $500,000 into your bank account and pay tax at it and start afresh, saving for retirement. In the two-pot system now, it means that on that $500,000, or by a simple example, let's assume you've got $100,000 in your retirement saving. 1/3 of that, of the $100,000, which is $33,333, becomes your savings component. So whether you resign or you do not resign, only the $33,000 is what you can access, and the 2/3, the $77,000, will not be accessible until retirement. Which, in a way, I think it's good. It's good for in the sense that people in the past would have typically chowed the entire 100,000 when they change jobs, but now you're forced to leave the 77 behind. So I guess over time we will see A lot of people having a substantial amount of money in their retirement days, in their savings plans, to be able to live comfortable on that amount of money. But again, I think the risk that I'm seeing again is that people, there was a lot of excitement in the market where everyone wanted to, dig in and take some cash. I mean, guys, let's understand the purpose of this. This legislation or the whole launch of the two-pot and withdrawal is not necessarily an invitation for you to now start digging in, even when you do not have a serious emergency, because the consequences of actually accessing this money, especially if you look at the tax implications, every cent that you withdraw from these funds will now be taxed, or is currently being taxed at your marginal rate. Yes, at your marginal rate. So if you earn more than 800 and I can't remember the exact number, but the guys earning 900,000 or 800 and per annum. Let me just see if I can find the tax table real quick so I can tell you exactly. Yeah, but I'm gonna put down a little example just to show you exactly how much it is that you will be taxed. I mean, let me see. So maybe to start, let's look at an example of how much you'd actually be taxed, and then we can get back to this conversation whilst I'm looking up for the income tax table rates. I do not know them off by heart, so I have to always reference to the income tax table. Let's look at an example. I'm going to share a screen right away. Look at an example, see exactly how much. We'll just do hypothetical scenarios, and then out of there we can then maybe continue the conversation. So SARS has created or added new functions onto their website where you can actually calculate the amount of tax liability should you wish to withdraw from the two-pot system. And it's quite an impressive, you send an OTP to your mobile number that's registered with the Revenue Authority. Put in that OTP, and voila, there's your calculation. So if you wish to withdraw 30,000 Rand out of the two-pot system in this tax year, the tax liability that they will deduct is 12,300. Therefore, the net payout after tax, assuming you do not have any outstanding debt with SARS, will be 17,700. And that's pretty much, that is something that could guide you, make a decision whether it's worth going ahead or not. Yeah, as you'd have seen, I mean, on a 30,000 Rand withdrawal, if you in the 41% tax bracket, meaning if your income is your annual income, salary, business income, whatever it may be, if you're earning between 857,901 and 1.8 million and 17,000, you fall into the 41% tax bracket. And in that regard, by you taking or putting in a withdrawal of the maximum allowed in this tax year of 30,000 Rand, you will actually pay about 12,300 in taxes that SARS will withhold back, and then pay you a net of about 17,700. I mean, it's a no-brainer. You literally saying you want to share the hard-earned cash that you've saved over the years with the state. And hence I'm saying it's not an invitation to withdraw. And if you're not sure and it sounds like jargon to you, please, I beg, speak to your financial advisor, get somebody qualified to give you the relevant advice and point you in the right direction. I mean, there's always been a lot of investment options in the market. Yes, I mean, the two-pot system, obviously, for some of us, we are forced to save for retirement because it's part of the package that you get at work. But again, I think it shouldn't be used as an option to actually save for your contingency, holiday money, or any other discretionary investment. Let retirement savings be for retirement saving. Therefore, I mean, if you would need money over time in future, there are other beautiful investment vehicles like endowment policies where your tax liability is not taxed at your marginal rate, but according to the rules that are set by, again, the state. I mean, where your capital gains tax is limited to only 12% and interest in an endowment policy, in most cases, limited to 30%, as opposed to the 41% that you would pay if you're in the higher tax bracket via the, retirement withdrawal from the two-pot system. So for me, essentially, I was a little bit concerned. And I think the one other thing that I've realized is that besides the tax that you pay, the admin cost of actually withdrawing those funds are quite substantial. I mean, I recently saw a withdrawal last week where some fund manager or life company, it charges about 350 Rand for every withdrawal from from the retirement two-pot system. 350 is a substantial amount of money for you to, pay on top of the 12,300 Rand tax that you would have typically paid as for the example that we just saw. And you'd find that when you typically withdraw from a unit trust or an endowment policy, these managers do not charge those costs. But I guess maybe they're trying to recoup the cost that they would have spent, building systems and making sure that these withdrawals are smooth. I know other managers are even, they've developed WhatsApp systems to allow members to actually access these funds. I mean, just as well stats, I know that as of the 19th, or is it the 29th of September, I know I saw in the media that Momentum Investments or wealth managers received just over 112,000 Rand withdrawals in the first week, withdrawal applications, and they paid close to about 1.7 billion. I mean, that was just in the first week. Out of that 1.7 billion, can you imagine how much SARS took back, in taxes? So, I mean, this conversation pretty much speaks to how you need to carefully plan and make sure that if you do need access to money, rather invest that money separately and do not touch your retirement saving. And even when you look at lifestyle in general, I mean, we're living longer these days. In the past, maybe a few decades ago, you would find that if you do retire at the age of 65, the planning post-retirement was around 10, 15 years. So you'd be given a life expectancy of age 80. So therefore, you want to spend your retirement savings for 15 years after your 65th birthday. That has changed a lot. I mean, people are eating healthy. There's a lot of information. People are living longer. Medical advancements are helping us to stick around for longer. Therefore, you probably find that you probably have another 30 to 40 years after your retirement date. So if you retire at the age of 60, maybe you only die at the age of 90. So that 30 years is a very long time. And for you to get excited and start depleting your retirement saving because of this two-pot system opportunity, I think it's unfair to yourself, especially if you do not have any other monies stashed somewhere else to be able to fall back on and fund your retirement income. Therefore, I totally discourage people from actually running towards this. I mean, we see people that are withdrawing retirement savings because they want to fix their cars or need to celebrate a birthday. Guys, I know it's not my money, and everyone has the right to do whatever they please with their money. But yeah, I mean, this behavior is so disheartening, and we see clients that bypass their financial advisors and they'll call the investment company directly because, yeah, the systems have already been built, but we get to hear about this because obviously we probably have to, your advisor has to sign off on that withdrawal form. And it's the asset manager's way to try and say, have you spoken to your advisor? Are you aware of what you're getting into and the implications of you actually drawing this money prematurely? And for me, I think, yes, if it's an emergency and you've got nowhere to turn, you rather withdraw from your retirement than actually go to a machonisa or personal loans that will charge you exorbitant interest rates. But again, half of the time we notice that when people withdraw from these investments and they always say, no, I'll put the money back, they never do. And you actually will be putting yourself a few steps backwards. Therefore, I think the message from this video is to just say, guys, there's a lot of investment opportunities and alternatives. And the two-pot withdrawal should be a last resort, purely because of the marginal income tax that's being deducted from the members' benefit. But again, I guess over the long term, we will see the savings ratio on retirement saving actually growing significantly. And then I think maybe if you do, and push comes to shove, and you do withdraw, I would then suggest that by you involving your financial advisor, qualified financial planner, you then maybe want to also look at your portfolio allocation and try and see if maybe you can rebalance your portfolio to try and increase the return in your portfolio. I mean, these days you can allocate up to 40% in foreign equity. So maybe taking a little bit of risk to try and maybe grow the rate of return that you're earning in your retirement saving, in a way, as much as there isn't a guarantee on that return, could maybe help mitigate, the losses that you'd have caused to yourself by actually exercising or withdrawing some of that money. But I think when it comes to investment planning, I think everyone needs to get back to the table and see how you can readjust your plans and maybe have your own second two-pot, or where you invest in a unit trust or an endowment to cater for your emergencies and just leave your retirement saving aside. Let retirement money be for retirement. What I'll do is maybe in the next video or two, I'll put together a little scenario on how we almost likely going to have shortfalls in your retirement saving, if depending on your age, or if you do not start too early, and if you did raise the capital and you keep on digging in and withdrawing from that, the implications that that would have on one. But also, I think asset allocation becomes very important, predominantly because then you always want to make sure that the money that you're saving, your 2/3 in your retirement saving that is going to be invested for the long term, maybe becomes invested in a growth asset or aggressive portfolio. Again, depending on your age, if you've got many years ahead to retirement, you can do that. And the savings component, in case you need to access money in your savings component via the two-pot system, you probably could have a different asset allocation, because I believe almost every fund manager now has systems in place where you could choose different assets for the 1/3, which is the money in the two-pot system that you can access. And if you want to go against advice and decide to always annually withdraw from your two-pot system, then maybe the asset allocation needs to be different from the aggressive portfolio where your 2/3 is sitting, that is likely to be invested for a very long term. I mean, investment planning is a lot more technical. There's a lot of education that we need to impart to our clients and members for those that are not very familiar. But the gist of the matter is rather set up a separate investment account that you can access with less restrictions, lower tax, and almost zero admin fee on withdrawals, as opposed to you actually, taking money into your retirement saving, and let that be the last resort when push comes to shove and you've got nowhere to turn, for you to then go in and access a portion of your 1/3 that is sitting in that two-pot system. This was just to scratch the surface, just to say, the key conversation in this video is just to encourage you to always first speak to your advisor, look at options, understand the implications before you can actually make that call directly to your pension fund administrator and call for these withdrawals, because your circumstances might be different to the next person. Maybe you in the 18% tax bracket, but we also always need to carefully look at that and make sure that it is the right decision to make. I'm going to end it off here. I just thought, let me touch it whilst it's still fresh and people are busy, making these decisions irrationally without advice. Please don't forget to like and subscribe and comment to this channel. If you need more information or you require a sit down to fully understand how this works, you can book a consultation on our website, www.capitalwealthcounsel.co.za, or maybe just leave a comment down below and we'll get somebody to contact you and schedule either an online or in-person meeting just to discuss and give you the full insight that is applicable to your situation. And let's just make sure that we're all creating wealth and not eroding wealth because everyone is throwing parties with two-pot money. And hence I thought, let's have a word around this, two-pot or not two-pot. And everything is a quid pro quo, like I always say. When you do pot, there is an exchange. You are literally sharing a portion of your savings with the state. And to not pot is you creating a wealth for yourself and your family for the long term. But again, your circumstances might be different from the next person. And maybe to pot now is the right decision or the only option that you have. So, let's have those conversations. It's your money after all. We can only just provide the relevant guidance so you've got the right tools and information in front of you to make an informed decision. Thank you for watching Capital Wealth Counsel. I'll see you in the next video. Don't forget to like, comment, and subscribe.